Welcome to the channel Get Rich. Today the company we are going to look into is working on the advertisement industry. So before going to look into the company, let's first have a look at the industry, and then we are going to look into the business segments of the company, and also how are they generating their revenues, and who are their customers are, what are their products are, and what are their financial statements look like, and what is their valuation if you look into 1, 2 and 3 year horizon. So let's get started. So first, let's have a look at the digital advertisement industry. So if you are looking into the digital advertisement industry, if you look into the global industry trends, for example, for the next 5 years, so it is expected to do about 6 billion new connected consumer devices to be added by 2025 globally. So what are the connected consumer devices? For example, smart home devices, consumer electronics, smart vehicles, wearables, and others. So almost 6 billion new devices are going to be entered into the market by 2025 globally. If you look into the global digital ad spend for the next 5 years, it's going to grow at a CAGR of about 9%. If you look into the mobile ad spend, it is going to increase at a CAGR of 11.3% in a global level. But if you look into the India industry trends, so there is a significant increase in India's digital user base with strong user affinity, because it's going at a CAGR of 11.4%. So the users in India is going to grow from 525 million to almost 902 million by financial year 2025. And if you look into the ad spend in India, so in e-commerce market it is going to grow about 24%. If you look into the mobile ad spend, it is going to grow about 32.4% CAGR for the next 5 years. So that's the industry growth. Just the industry growth is going to be 32.4% for the next 5 years for the mobile ad spend. If the company is overperforming the market, then it's going to be grow at 35 to 40%. So that's phenomenal growth for the next 5 years. So the digital advertising spend in India is projected to grow about 32.4% of visa. So it's going to increase from $2.16 billion to almost $8.25 billion in financial year 2025. And if you look into the Indian digital ad channel, it's going to set to become the largest among all other media channels, including TV, print, radio, out of homes, etc. So in 2025, this digital ad spend is going to be a much bigger part in the advertisement industry. So this is a very good growing sector in the coming years again. And also, if you look into the how the growth is going to come from, because we have 4G penetration and cost-effective data packages, proliferation of the mobile apps, so they have social media. Everything is growing rapidly in India. So mobile ad spend is going to grow up to about 32.4%. That's in short. We are going to take away from this discussion. So, and also if you look into the online retailing channel, so for example, India has led the total number of app downloads from global Play Store, followed by United States in 2020. So India is expected to have about 900 million internet users by 2025, and 75% of the new user growth is expected to come from rural areas. So that's mainly about the digital advertisement industry. And also if you look into some of their growth factors of the industry, so we already saw the fast growing digital ad market, and there will be a growing penetration of connected devices. For example, only half of the world is online now, with US and UK almost 80% smartphone penetration, and the emerging markets, they are trailing, with India 32% smartphone penetration, Brazil 51%, and Indonesia 59%. So there is going to be a huge room in the emerging markets when compared with US and UK. And then the company we are going to look into today is Affle India Ltd. It's a global technology company. It has a leading market position in India. They have a very good profitable business model. So they have a well-defined strategic growth plan. So they have an end-to-end mobile advertising platform. So they have an in-house data management platform with over 2.4 million connected devices reached. So that is driving their algorithm to connect customers and help different companies to reach their targeted customers. And they also have fraud detection platform to help deliver high ROI to their customers. So if you look into the Affle India Ltd, so they have a market cap of about 16,800 crores. So their current stock P is 82.5. So 82.5, many might see 82.5 is very high P. But then we have to look into the growth, because the industry growth is expected to be about 32% for the next 5 years. So we have to take that into account. So then if you look into their return on equity, it's 46%. Their return on assets is 23%, and they have debt to equity of 0.16. That's reasonable. So if you look into their some of their key parameters or key ratios, yeah, they have 147 R&D people working on, and they have a patent filed. They have 19 patents filed. Their user conversions is about 105 million, so they are converting 105 million users to their potential targeted users for their customers. And if you look into their total revenue CAGR for the past 4 years, they were growing about 49.3% for the past 4 years. And if you look at their revenue growth year over year for quarter 3 financial 2022, they are growing about 125% year over year. EBITDA growth 76%, PAT growth 96%. 9-month financial 2022, their revenue growth 104%, their EBITDA growth 62%, their PAT growth 71%. This is phenomenal growth. And also if you look into their key ratios, ROE 29%, ROCE 17.8%, and they also have a good operating cash flow to PAT. And for any company, we have to look into the moat. What is the moat of this particular company? Because if there is no moat, anyone can come and disrupt their business. So what are their key main barriers to entry, for example? So India have a disjoint demographics. For example, there will be a wide variation in shopping patterns because they need to have a lot of data to understand the customer base. So they have familiarity with local demographics. They have a track record of working with many different Indian brands. So they have a very good tech behind them. So they have a predictive algorithm and strong network enabling precise customer targeting. And also there is a price sensitivity in India because India remains a low CPCU market versus other global market. So what is CPCU? CPCU is cost per converted user. So I will explain that in detail in some time. So if you look at India, India has 1/5 of the cost when compared with the developed market. So they have to operate in a very low CPCU market. So even in the low CPCU market, they have a track record of profitability in the low CPCU Indian market. And also if you look into the user behavior, so online commerce penetration is still very low in India. So they have extensive consumer profile data now. So data is very valuable. So they have a lot of data. They are already operating about 15 years. So they can leverage their data, and then they can be a leader in this particular segment. So they have a very good moat, I would say. And if you look at the price, so yeah, it is growing phenomenally, and then the price followed. Of course, the price is a slave of the net income or the profit. So yeah, the price went up because they are increasing their net income like crazy. Profit after tax, they are increasing a lot. So price followed, of course. So price increased about like threefold from 400 to 1200. It even reached 1500 at some point. So currently it's trading somewhere about 1200. So as we see in the chart, if you have to look into some of the technicals, so 1200 seems to be a good support. After that around 1000, after that around 800. So yeah, let's see the P ratio of this particular company. So if you look into that, the current P ratio, it is trading about 82 P. So they even reached 160 P at some point of time, and currently it's trading around 82.5 P, and the average P for this company is 82. So this company always traded at a much higher valuation, but they don't also not have a very long history because they listed recently, I guess. So they only had about 2 to 3 years in the market, but they have always traded above 80, or average is 80. And then if you look into their business segment, so what are the different business segment they are bringing their revenue in? So their main business segment is consumer platform. So they have a consumer platform which delivers acquisition, engagement, and transaction for leading brands and B2C companies. It also includes retargeting and push notifications for e-commerce. So 99.1% of their revenue is coming from their consumer platform. And if you look into their remaining revenue, they have enterprise platform which enabling offline businesses to go online through app development, and O2O commerce and data analytics. So these are a very small amount of money is coming from this particular side. They have 0.9% of their revenue is coming from enterprise platform. So most of their revenues are coming from consumer platform. So if you look into their consumer platform, they have 3 different use cases. So first one is new user conversion. So they are targeted new user acquisition optimized to in-app transaction registration event. So what they just do, they just convert a new user to one of their customer. That's one use case. And also existing user repeat conversion. For example, in this case, it's an existing user, but then they again made them to buy some of their items of their customers. So it's targeted interested user to complete the transaction. That's the second use case. And then they have new existing user conversion offline. So this is to driving footfalls and transaction at physical retail stores, that is O2O. So using online ad, they convert their traffic to physical footfalls to the physical stores. That's the third use case. So these are the three different types they are getting customers for their customers. So they have about 90.2% of their consumer platform revenue contributed by CPCU model. CPCU is cost per converted user. So they are converting their user, right? For example, they are targeting a lot of people by providing ads for their customers, and then if they convert one of the user, for example, one of the customers, for example, Swiggy. Swiggy is a customer of this particular company, Affle India Ltd, and they are going to run ad for Swiggy. And one of us or one of the people who saw the ad, they are going to click or go into Swiggy and order something, and then they are noted as the converted user. So that is a converted user. So Swiggy, their customer, has to pay cost per converted user. For every converted user, they have to pay some amount of money to Affle India Ltd. So that's cost per converted user. So and then remaining 9.8% is coming from non-cost per converted user. And then if you look into their demographic or where their revenues are coming from, so in financial 2020, 51.2% of their revenue is coming from India, and 48.8% is coming from international. And financial 2021, it's 49.7% and 50.3%. In 9-month financial 2022, 35.6% revenue is coming from India, 64.4% of the revenue is coming from international. So international revenue is increasing, which is good. Why? Because the cost per converted user, or that revenue is higher in international market than in India. As I already said, in India it's only 1/5 of the international market. So if international market, for example, if they pay 100 rupees per converted user, then India they will only pay 20 rupees per cost per converted user. So that's the difference, 5 times. So they have it's not strictly 5 times. So it's as average. It's in India have about 1/5 of the CPCU when compared to international markets. So they have higher CPCU when compared to the international market. It of course depends on where in international, if it's Africa, or if it's Latin America, or if it's US or UK or Europe, depends on where the CPCU cost changes. But usually the international CPCU cost is higher than India. So they are almost 64.4% of their revenue is coming from international. So that's good. And if you look at their key categories they want to focus on, they have category E, F, G and H, and they defined e-commerce, edtech, entertainment in E, and then F, fintech, FMCG, food tech, and G, gaming, government, groceries, H, health tech and hospitality and travel. So these are the categories they are focusing on, and their revenue contribution from E, F, G and H categories is increasing from 74% in financial 2020 to almost 91% in 9-month financial 2022. And if you look at their revenue model, as I said, they have a converted user. So they are converting some people to customers of their customers. So then in that case, the converted users are increasing quarter by quarter. In quarter 3 financial 2020, they converted 20.9 million people to converted user for their customers. And in quarter 3 financial 2020, it increased to 30.6 million converted user. In quarter 3 financial 2020, it's 58.5 million converted user, and their average cost per converted user is increasing from 41.1 rupees to almost 51.8 rupees, because they are more and more they are getting revenues from international. So their average CPCU is increasing from 41.1 to 51.8. And their CPCU revenue is also increased. Of course, it's increased from 86 crores to almost 303 crores from quarter 3 financial 2020 to quarter 3 financial 2022. And if you look into their converted user growth, they are growing about 67.2% CAGR in quarter 3 for the past 3 quarters, and year over growth they are doing about 91.2%. And if you look into some of their products, what are the different products they have? So they have different products in different segments or different part of the ecosystem. So first they have to identify interested users. For that they have a product, a DMP, so they which is used to identify interested user. And then they have different products for acquire new users and shoppers. They have Revex, AppNext, Moz. So they have different products in that category. And then they have to drive conversion and engagement. So for that they also have a product, and they also have a product to re-engage users and maximize their transactions. And they also have products to proximity marketing with O2O incrementality. For example, they have to target some customers based on their location, for example, and they have to target some customer based on their interest, so based on their locations and so on. So that's their proximity marketing with O2O incrementality. So which is to increase their offline sales, for example, physical stores traffic they want to increase based on their ad. So that's proximity marketing with O2O and capability. So they have different products in all of these different segments. So they also recently launched, for example, connected TV proposition, or they call it CTV. So they are using these kind of solution to increase their customers to deliver ad in a big screen, for example connected TV. And they also have launch of AppNext, which is out of the box experience. AppNext out of the box experience. So this platform is an app discovery and recommendation platform that drives on device personalized app recommendations to mobile users globally. So they are doing a lot of innovation, and they are developing a lot of new products. And then if you look into their recent acquisitions, they did a lot of acquisition, and they turned around a lot of the companies. They increased their EBITDA margins and so on. For example, they acquired a lot of companies. So for example, the first one is Visuri, mobile ad commerce business, and then software convert online consumer engagement into in-store walk-ins. And they also acquired Revex, which is self-serve programmatic platform to deliver consumer acquisition, engagement, and transactions. And they also have Media Smart, and then AppNext, and then Bubble AI, and then Discover Tech. So they did a lot of acquisitions, and they also everything they integrated into Affle pretty nicely. And also if you look at the recent acquisition, they did Jamp as a recent acquisition, so they will integrate that in the recent times. And Affle is and the Jamp they acquired, Affle acquired, so which is mainly active in, for example, North America. They have ability to do ad based on the scan network. What is scan technology? So for example, recently Apple they introduced some changes to their iOS platform. So in that case, they used scan technology because it's a privacy centric future. For example, how do you target? What are the different things data you collect and so on? So that's a mainly privacy centric change. And lot of the customers, for example, even Facebook and different customers are not ready for this, but they already have the technology to incorporate that technology and use and target the customers in iOS platform. So that's a very great. I will also explain this in some time. And if you look into their global reach, for example, their primary market is in India, Southeast Asia, Middle East, and Africa, and Latin America. They have 0.6 billion connected devices in India, and they have other key markets. For example, North America, Europe, Japan, Korea, and Australia. They have 1.6 billion connected devices international. So as we already saw, 35.6% revenue is coming from India, 64.4% revenue is coming from international. And if you look into their R&D, they have about 9 patents in India. They have 9 patents in US and Singapore and India. So they also in IP portfolio data privacy, in ad fraud they have 9 patents in India and US. And they also have a Singapore government organization accredited. And they are doing a lot of innovations. That's pretty nice. And if you look into their awards, they are getting a lot of awards for their platforms, their technology. So that's great. And also if you look into their strategy going ahead, they had Affle 2.0 strategy. So what is Affle 2.0 strategy? Which is primarily anchored on 3 different things, which is vernacular, verticalization, and ecosystem level mobile equipment organization manufacturers tie-up. So first one is vernacular. What is vernacular? It is to enable hyper-personalized consumer recommendation and target next set of users coming from Indian tier 2, tier 3 market. So it's mainly to target customers who are willing to buy this product. So it's a vernacular. So hyper personalized. For example, if I am looking especially for something, if I am looking for something, then target those customers who are really in need of that particular product. And then verticalization, it's draws deeper insights across the high growth industry verticals. So it's about to focus on different booming sectors. And then we have ecosystem level partnerships. They have partnerships with mobile OEMs, operators, and publishers to enable exclusive access to on-device touchpoints and augment holistic advertisement across the consumer connected journey. So they even wanted to tie up with OEMs or original equipment manufacturers, like for example Samsung, Xiaomi, and different other companies, and then have tie up with them to have access to the on-device touchscreen points to run some ad and so on. So that's their three core strategy. And if you look at their different innovations, so they, as I said, they are doing a lot of innovation. So one is related to the gesture based voice intelligent driven interactions with the live stream such as podcast, and they also have a blockchain based technology IP for fraud detection. And if you also look into the JAMP acquisition, so as we just touched upon, so JAMP has North America as the key market, so which has 50% of iOS penetration. So post implementation of stringent data privacy rules, JAM was among the earliest movers in adopting SCAN. So SCAN Ad Network, SK Ad Network, is a privacy centric API operated by Apple, which helps measure ad activity on an aggregate level. So as most of the advertisers and developers were still unprepared, even like Facebook, the new changes, Jam created their own app, birthday buses, to test SCAN. So using this technology, Jam drove 50% more efficient conversion in SCAN campaigns when compared to Android. So that's pretty good because they have a very good technology, and Affle is acquiring a lot of different of these, and they are also driving organic growth. So that's pretty good. It's a very good company. They have a lot of innovation going on, and they are always ahead of the market. And if you look at some of the case studies of their customers, they have a lot of high profile customers. So if you look at their case study, for example, Swiggy. So Swiggy is India's leading online food ordering and delivery platform. So they want to drive their business by customering. So for example, by targeting high profile customers, or for targeting more relevant customers, and also pin code based ad targeting and blocking. So their results is phenomenal. So they have 177% increase in shopping conversions from new users. So 3.2 scale in post install orders. They have 3.2x they increase their post install orders. They have greater ROI realization by driving higher conversions. So it's a phenomenal success. So with Swiggy, they did a good job. So that's very good to see. And then if you see KFC, so in Malaysia, so KFC is a global leader in the quick service restaurant business. So in the pandemic era in Malaysia, so they wanted to increase higher footfalls to their store, or even they want to increase their online purchase. So they did about 8% increase in their first order rates after the installation of Affle, and they have successfully enabled online orders through 700 plus offline stores. They have a greater ROI realization as well. So they also a happy customer, KFC in Malaysia. And then if you look at the Levi's, so with offline retail starting to open after the lockdown, so they wanted to increase their more shoppers to the physical stores. So they want to find high affinity users. They want to target based on the location targeting. So their results are also good. 46% incremental visits to Levi's stores, and also 2.83x uplift for ad exposed users, and they have significant growth in attributed visit conversion to physical stores. That's also pretty good. And then if you look into Byju's is also one of the customer of Affle India. So Byju's is the leading edtech company from India. So the Byju's has a significant loyal user base in Indian metros. So they want to focus on, for example, tier 2 and tier 3 towns in India, and onboard new customers. Affle run these kind of vernacular targeted ads based on these particular specifications, and they are able to increase 83% increase in monthly conversions, 55% registration ratio amongst newly onboarded users, 3x ROI on ad spend. So that's very good. And then we have Fossil. So Fossil is the leading global fashion and accessories brand. They are also a customer of Affle India. So they also wanted to increase their physical store footfall. So as a result, they have 87% online leads converted to in-store sales. Imagine 87% online leads converted to in-store sales. That's phenomenal. So they are doing pretty good job. And then they have 23x return on investment, double-digit growth in offline sales from online channels. That's also pretty nice to see. And then if you see Coin DCX, so Coin DCX is India's first crypto unicorn. So they are also customer of Affle India. So they wanted to have a find and target new users with So they have over 75k conversions delivered in quarter 1 and quarter 2, 10% plus month on month growth, and also 40% uplift in registration. So that's also very good. And then if you look at the Gcash, which is a leading fintech player from Philippines, and they were recently recognized as the first ever Filipino unicorn. So they also worked with Affle India, so they increased new user registration and drive high adoption of the Gcash app. So 47% growth in monthly conversion, 40% conversion ratio maintained, showcased consistent quality, so significant and consistent growth in user registration. And then if you look at another customer, which is Tokopedia, so Tokopedia is Indonesia's biggest online marketplace. So they have 6x boost in conversion rate by video ads. They have 5.3x increase in ROAS on video ads. They have 3x boost in app engagement, 2x increase in conversions. So they are also doing pretty good with these particular customers as well. So if you look at the Fetch Rewards, so Fetch Rewards is also one of the customers in North America. So Fetch Rewards is a leading mobile shopping platform in the US that rewards shoppers for their purchase. So they have 41% higher ROI in scan campaigns, so 50% higher ROI in scan campaigns, and then significant scale up and consistent growth on scan campaigns. So that's pretty good to see. And then if you look at the financial statements, so these are the different customers of Affle India, and they did a case study, and all have phenomenal growth, and they all are high profile customers. So they are from India, from Malaysia, from Philippines, they're from North America, from all over the world. So that they're getting big and big. So they're also doing very good job. Their technology is good, it's working, customers are realizing that, and mobile ad is going to be the future. So they have a pretty good chance of making it big. So I believe it's a very good company growing at phenomenal rates. So let's have a look at their financial statements. So their revenue from operations which are growing about CAGR of 66% for quarter 3 CAGR. And then if you look at the overall CAGR from 9-month financial 19 to 2022, they are increasing their revenue 60%, EBITDA 45%, profit after tax 56%. If you look at their financial statement year over year, financial 18 to 21, so they are doing about 45% revenue growth, and total revenue is 49%. Their EBITDA is 42%, profit after tax 70%, and their normalized PAT is 54%. So their operating cash flows is also increasing at a 35% CAGR. So they are doing phenomenal. And if you look at their EBITDA margin, so their EBITDA margin is always about 25, so even reached 30, 33 at some point, and then it reduced to 25, 28, 26, 25. So they were at 25 for so long, the EBITDA margin, and recently in recent 2 quarters it reduced to 19%. The reason being they recently acquired Jamp, so their EBITDA margin are lesser, only in I think 10%, 9% I believe. So that's why their EBITDA margin dropped. But then they always acquire companies, and then they try to increase their EBITDA margin. So that's a very nice thing they are doing. That's great to see. And also if you look at their PAT margin, it's also reduced because of their acquisition, and I believe they are going to increase their margins going ahead. So then let's have a look at their quarter over quarter financial statement. So they are increasing their sales, for example 60 crores in March 2019 to about 339 crores in December 2021, phenomenal growth. Their net profit is increased from 14 crores and 62 crores in December 2021. That's great. So as I said, their margins it was great, 26, 25, 26, 30, 33, and recently it reduced to 19, 20% because of the Jamp acquisition, and then they can able to increase their margins going ahead. And if you look at their year over year growth, in March 2018 they had a sales of 167 crores, and currently they have about 1000 crores. So that's phenomenal. And their net profit is increased from 28 crores to about 200 crores in just 5 years. So look at that growth, not even 5 years, just 4 years they increased from net profit 28 crores to about 200 crores. That's great. And if you look at their compounded sales growth, they are growing about 46% for the past 3 years, 69% for the profit growth, and their return on equity is also phenomenal. And their OPM is 27, 28, 26, 25, and currently 21. And I said I believe they are going to increase their margins going ahead. So it's just standing around Jump, that's all. And then if you look into their balance sheet, so they are also increasing their balance sheet about now 1650 crores. So they have reserves of 1000 crores, and their borrowings is also not alarming, it's 164 crores. That's okay. And then if you look at their cash flow statement, so they're also increasing their cash flow. Their cash flow is increased from 41 crores to about 100 crores in financial 2021. And if you look at their free cash flow, it's still negative. They are investing a lot. Yeah, but then go ahead, they are going to have a generate a lot of free cash flow as well, I believe. And if you look at their PAT growth based on analyst expectation, so their bottom line they are expecting to do about somewhere around 315 320 to 375 crores in financial year 2024. So they are going to top line is going to do somewhere around 1500 to 2000 crores. That's the analyzed expectation. And if you look at their shareholding, the promoter is consistently reducing their shareholding from 68% to about 59%. If you look at the FII, they are loading up from 8% to almost 18% in June 2021, and then they started reducing in September and December. And if you look at the DIIs, they are reducing overall, and then recently they in the last quarter they slightly increased the DII. And if you look at the public, they are also increasing their shares because everybody is decreasing, then somebody has to buy, so the public shareholding is increasing. And if you look at the mutual fund holding, they are offloading for the past months. And FII are slowly reducing a little bit in the past months. So, and if you look at the mutual fund holding, some of the funds which are holding this Nippon India Small Cap Fund, ICICI Prudential Technology Fund Growth, L&T Mid Cap Fund Growth, Aditya Birla Life Equity Advantage Fund Growth, and then Sundaram Services Regular Fund, Tata Digital India, Franklin India, UTI, Sundaram, and then we have as well as Nippon India Growth Fund. So if you look at the whether they bought or reduced, for example, in December, ICICI Prudential Technology they increased 10%, but L&T Midcap they reduced 16% of their shareholding. Sundaram Services they increased 17%, and then Tata Digital 26%, and Franklin India they even they only purchased in December 2021. And if you look at the Nippon India Growth Fund, they also entered into in December 2021. So they still believe this valuation is still reasonable, and they are going to do phenomenal in the coming year. So most of the mutual funds, even though they are decreasing, some are buying as well. And let's look at the valuation of the company. So the revenue projections in 2021 they did 517 crores. 2022 I'm expecting they will do about 1100 crores. In 2023 I'm expecting to do 1500 crores, and 2024 1950 crores at a growth rate of 36% in 2023 and 30% in 2024. I'm being conservative. 2022 they did 113% because they did acquisition. So I am expecting organic growth of 36%, 30% in 2023 and 2024. And net income it increased to 135 crores and 200 crores in 2022, and I am expecting them to do 285 crores in 2023 and 380 crores in 2024 with a growth rate of 39% and 33%. And then if you look at the price target with the current valuation with a P of 83, then 1 year price target would be 1768 rupees, 2 year price target would be 2357 rupees with a price cumulative growth of 40% and 87%. If you look at the price target with a P of 60, so why 60? So if you look at the P of 83, so P of 83 is the average P. So for example, if they are growing at 35% for the next 5 years or 5-6 years, so then even the P of 83 is still reasonable. They can even trade at 83 or 100 or 83 in 2 years from now, 3 years from now. That's absolutely possible. So but I always wanted to have a conservative approach for my valuation because I want the company to be undervalued sometimes. But sometimes, phenomenal companies, very good companies growing very good growth rate, you don't get it cheap. They always trade at a much higher valuation. Look at Amazon, look at Netflix, look at Nvidia. So a lot of companies, these are phenomenal companies, they always trade at a much higher valuation. Look at Tesla, it always traded at even it trading now currently it's trading at 100p, 90p. So all the growth companies they always trade at much higher valuation. So I understand that, but I am still being greedy. For example, let's say if at all if the growth slows down, so these P they can trade at this P only if they are keep growing quarter over quarter, year over year, and they are keep putting very big earning beats, very good bottom line growth, top line growth. If they are keep doing that, then their P can sustain at 8300. That's still okay. But for example, if there is some sign of growth slowing down of the growth, for example 35% to 25-20, then the market is going to punish them severely. So for the long term PE, so I am estimating the price target of very being conservative with a PE of 60. So even if I calculate with PE of 60 in 1 year, it's going to have 1286 rupees. In 2 years 1714 rupees with a price cumulative growth of 2% and 36%. If you're asking my verdict of this particular stock, so Yeah, for me, this company is a phenomenal company. It's going very good. They have a very good tech. Fundamentals are very really nice. They have a good moat. If you are someone who happened to buy this share some time ago when it was trading cheap, you are really lucky. You can keep holding this share. It's going to provide you phenomenal return going ahead. It has a very good growth going ahead. So if you're already an existing shareholder, yeah, please don't sell it. Please yeah, hold it. It's going to be a very good company for the next very interesting company for the next 5-7 years. For new investors who want to invest in this stock, for example, if you have a very long term overview of 5 to 10 years, so then you can yeah, buy this stock. It corrected from 1500 to 1200. You can enter this stock. But yeah, but if you ask me if I am buying now, so no, I'm not currently buying this share at 1200. So I'm being greedy. For example, if it comes down to 1800, yeah, if it comes down to 800, that's where I am getting really attractive in this stock. If it comes to 800, if there isn't some opportunity, if market corrects, if the stock comes to 800 rupees, I'm getting really interested in this company. That's where I will buy. So somewhere between 800 and 1000, that's where I believe yeah, 800 is a very steal deal if you can get that stock at that price. But I don't know whether it can correct, because it's a yeah, if it keeps posting quarter over quarter very good numbers, yeah, then it's yeah, difficult. But now they acquired Jamp, for example, their margin went down, so for some time they're going to improve their margin going ahead. But yeah, if there is some weakness, if it comes back, then I will buy. But currently at this valuation, I'm not buying. But if you're a long-term investor, if you're really interested not to miss out this particular opportunity of industry growing about 32%, very good growth company, then you can go ahead and buy. If you have a long-term overview, if you're an existing shareholder, please keep holding. It's a very good company with good potential. Okay, so if you are new to this channel, please subscribe this channel. If you like this video, like, share and comment. And if you want me to analyze any other company, please put it in the comments. So Affle India is somebody asked me, I think 1 year ago. I haven't yeah, looked into that company detail. If I have looked into that company 1 year ago, yeah, I would have probably bought this company because at that time it was pretty, yeah, cheap. So yeah, if you have any companies, if you want me to analyze, please put that in the list. I always have a look at them, and then yeah, once I have very good potential going ahead, I will look into it, and then I will yeah, do analysis of this particular company as well. So if you want my free email newsletter, or please subscribe in the link below. And if you like this video, please like, share and comment. And that's all for today. Thank you for watching and have a nice day. Bye bye.